The consumer continues to be resilient with the rising costs that we've seen. It's Friday, July 17th, and this is Markets with Megan. If you like this podcast, you can subscribe. Hit that alarm bell that's down below. Also, share it with your friends, your family, your colleagues, anybody who wants to dig into that economic data that we get on a regular basis and what those headlines mean and what does it mean for your investments. Let's dig into some information that we got about the consumer. Yesterday, we received the monthly retail sales data for June, and this morning we released the preliminary reading on the University of Michigan Consumer Sentiment Index for July. So let's start with retail sales. When you look at retail sales, they came in relatively in line with expectations, and we did expect some weakness in the numbers because this does include gasoline sales. So we saw a pretty big decline in gasoline station sales. They led this index from growing, it was up 1% last month in the month of May, only grew 0.2%. But when we strip out the volatile items, meaning food, energy, building materials, that's called the control group, and that actually grew 0.5% on a month-over-month basis, slightly lower than last month's 0.8%, but 0.5% is pretty strong. Now, I will remind people that these numbers are not inflation adjusted. So even though it looks like a strong increase on from a sales number, it's very difficult to decipher what part of that is just higher prices and what's actually demand. Regardless, let's look at some of the areas that were strong. Motor vehicles were up almost 2% on the month. Electronics, these both do have us a little concerned because both of these do have some of those inflationary components in them. When you look at that control group, it's actually growing 9.2% on a 3-month averaged annualized pace. That's very strong when you look at that historically. Again, the weakness was basically in the gasoline station sales and then the food and beverages. Both of those are impacted by the decline we've seen in commodity prices and what we did see in the month of June with the reopening of the Strait of Hormuz. Now, looking into July with that consumer confidence number that we got, much stronger than expected. Consumer confidence came in at 54. This takes us all the way back to prior to the war with Iran. This goes all the way back to February of this year before we had a better number. Both components, confidence on the current conditions as well as future expectations increased. When you look at some of the components, you look at the household finances and what consumers see their finances versus a year ago. That's the highest we've seen since March. And then the big one is what do they expect in the future, the next 12 months? And that's the highest we've seen since February. So again, we're wiping out some of this war with Iran. And when you look at those expecting higher income over the next year, that was the highest we've seen since February. These numbers were also very diversified across income levels. So it does show that consumers were confident that the war had temporarily ended. We'll see when we get the final reading at the end of this month. If this continues, the war continues, and the gas prices have gone up, if that continues, we'll see if that impacts this number and it gets revised lower. Again, the markets today are really being impacted more on some news that's coming out of the AI space. So we're seeing some weakness in technology, semiconductors, and then we do have the next couple weeks will really be overwhelmed by earnings reports, so that there'll be market movers as well. That's all we have today. If you want a history of our podcast, you can go to marketswithmegan.fm. Thank you.